Hey everyone, welcome to our show. It is earnings week in a big way. We have over 1,700 companies declaring earnings this week. We're going to narrow down that list. We're going to be looking at last week's selections of Ford, Visa, PayPal, Intel, Microsoft, and Amazon. And then this week, we're going to touch on Marriott, Wynn, Airbnb, Affirm, so much more. Welcome to Earnings Call. Here we go. Well, as I mentioned, we are in the heart of earnings season. We have over 3,200 companies declaring earnings this year, or this month. Sorry, this month alone. 1,700 of those declare this week, and we are watching 94 of them really close. And I've even narrowed that down here on our list into big potential winners, big potential losers, also quiet stocks. We're going to take a look at those in a few moments, but we're going to be talking about Pinterest and Toyota Motor and Expedia for this week. But let's start off with last week and let's look at some of the headlines there. We're going to begin with Ford Motor Company. They had an earnings beat and revenue beat, nice revenue. But their guidance was overshadowed by loss in their EV sales and their big investment into EV. And I find this very interesting, given how many of these competitors to the dominant Tesla right now in that space is not going well. So the stock actually, if we take a look at the chart, the stock had an estimated move of about 10% through earnings. The stock did have that volatility. It actually traded lower by 10% before finally settling down 8.44% on earnings. And you can see here as we look at the chart, the stock did sell off kind of back down to those lows on that earnings day. So 3 days after earnings, it did get down to that 10%. Today, it's having a moderate rally, only up 1.66%, but definitely a change in direction for Ford. Moving on to our next headline, which is Visa. Visa beat on revenue, beat on our earnings estimate. They announced cutting 1,400 jobs, which is actually bullish for the stock. And they raised their dividend by about 13% to 59 cents a share. If we take a look at the stock market did like this. The estimated move was for the stock to jump or drop about 3%. And look at that. The post-earnings move, the stock closed right at 2.94%. So right at that 3% number. Stock is holding in, even though markets are kind of flat. We have a big week this week. We have obviously the election tomorrow and a couple of economic reports that we'll be watching. So it could be pretty volatile week, but Visa's hanging in there for right now. Moving on to our next headline, we have PayPal. PayPal beat by 13 cents revenue, but missed on operating expenses as those exceeded expectations. And the stock reacted, of course, to this, but not as much as we usually see. I found this very interesting because the estimated move, the expected move was about 9% for PayPal, and it only dropped. It did move around 8% through the day, but it closed down only 3.96%. So right at 4%, which was a lot less volatile. The stock has since changed direction. You'll see this with earnings events quite a bit. You can see the big rally here, and then all of a sudden we get this earnings, stock starts to sell off. This will be something to watch. If you're bullish, I would definitely hedge your position. If you know how to hedge using options, that's probably best. And if you are a bearish, well, I think you're in a good place as the stock might continue to sell off at this point. Okay, one more headline here before we talk about some other stocks, and that will be Intel. They missed, by 43 cents. And then revenue did beat to the tune of about 240 million. The stock did react to this, but again, not as we thought, or well, the market thought. The market thought this stock is going to move over, it's going to move double digits. And the stock only moved by 7.8%. And if you look at the chart here, that doesn't look like a very big move, but that was an increase of 7.8% on the day. And we kind of thought that would start filling this gap back here. And it didn't even violate this previous peak from late September. All right. So the stock Friday, it gapped up, but nowhere near the minimum. This red line that I have here, that was the estimated move for the stock. Okay. And it got nowhere close to that. And now the stock is actually settling down. It's down 2% on the day. But as you can see, it's just trending sideways right now. The story on Intel is, they're really struggling and really behind the curve. In fact, Nvidia is being added to the Dow, I believe. So, man, what a change in direction for two different stocks in that industry. Okay, so on to a couple of other stocks here from last week. We had Microsoft. It did violate its estimated move. We were looking for an average move of about 3%. The stock closed 6% lower on heavy trade. The stock did rally on Friday. As you can see here, it moved. This horizontal red line is the estimated move, and it did jump above that. And then you have today's sell-off. We're only down 58 basis points, but it is looking a little weak after this series of higher lows. So we had this low back here in August. We had this higher low in September. We have this higher low in October. And now we have violated that most recent higher low. So that could be a possible change in trend on Microsoft as we head into the fall. So one more stock from last week. We'll take a look at Amazon. Okay. And, interestingly enough, this had a pretty volatile day. Within a 3-day period, on Wednesday last week, the stock moved higher by 1%. That's a 1% move where my crosshairs are. Then on Thursday, on Halloween, the stock moved down by a little over 3%. And then on earnings, after market, the next day on Friday, the stock closed up higher by 6%. So in one sense, we hit our expected move. It did jump around in a 9-10% range, but the stock only closed higher by 6.19% when we were actually looking for a move of around 8%. Okay. And you can see that just, when you're dealing with these high dollar stocks, you can see the increase in volatility here over the past several days as this stock is really starting to ping pong around. Nice consolidation going into that earnings, but not the expected move that we thought. All right. So that's a quick little recap of last week. Let's move into this week. As I mentioned, we have over 1,700 companies declaring earnings this week. I've got this divided up on the left-hand side of the sheet. We have the stocks that have estimated moves of greater than 10%. We call those breakout stocks. And on the right-hand side, we have stocks that we call quiet. Okay, stocks that are going to consolidate around less than double digits. So usually anywhere from 3 to 9% is what we expect from those. And as you can see here, we had right off the bat this morning, we had Palantir and Freshpet. I believe Freshpet does. It declares aftermarket close today. Marriott did have earnings this morning. When Resorts has earnings, we'll talk about those stocks again in a moment. But a couple of others to note here. Supermicro Computer on the left-hand side of the screen, that's SMCI. They made news last week. That might have taken the double-digit move around earnings out of play. I don't know. But they essentially fired their accountants, and that was big news because you never know what's happening to the books after something like that. And I bet you they declare non-GAAP earnings. Classic statement. We see this all the time now. A lot of companies using non-GAAP. GAAP stands for generally accepted accounting principles, and they're using non-GAAP. So that allows you to, let's just say, move different numbers in and out of your releases. Always suspicious when companies do that. Even the big reputable ones, because they'll always release GAAP earnings or numbers as well at the same time. So if they just release non-GAAP, that's always a concern. All right. But we have Ferrari tomorrow. We have Elf. Sorry, a little misspelling there on the symbol. That's not Carvana. That's Elf. Just caught that. My bad. That's my bad on that. And then we have CBS and Toyota, Affirm, Pinterest, Hershey, Halliburton. A lot of stocks. Let's narrow down this list a little bit and go over some of these bigger names here. Let's start with Marriott. They had a move today that was expected to be less than 6%. As you can see, there was a little volatility. The stock dropped to 250. Look at that. Big round number, bounced right off of 250 today. Currently trading at 255. That stock's down just 2%. So well within that 6% estimate. That was a quiet candidate that we had where we would sell premium. But you'll notice the nice consolidating pattern going into earnings. Look for this in future charts that we're going to look at in just a moment because we have some really nice setups coming up here. All right, let's take a look at when we'll declare after market close today. And you'll notice here a little bit of consolidation, and then the stock began to move. We see a move here of about 6% is what the market makers, again, this is what professional traders are estimating in the moves to be. Okay. And there's a formula for that they use and that we use. All right. And that move is expected to be around 6% or less for win results. Now, Airbnb, they will have earnings on Thursday. We got a lot of stocks that are going to have earnings on Thursday, between Wednesday and Thursday, but specifically Thursday. All right, Airbnb is one of those. They have earnings on Thursday after market close. This has an expected move less than 7%. This is a $135 stock, but you'll notice the consolidation pattern here. Okay, there is really good news, potentially good news, and maybe some concerning news with this. Anytime you get a little bit of a channeling effect, and this is a little baby wedge. So, but we'll see if there's a little bit of a breakout on this going into earnings on Thursday. Next, we want to look at Affirm. It also has earnings after market close on Thursday. That's where the little pointer is. This has a move expected. And again, another trader mistake here. That should be greater than 15%, not less than 15%. That should be greater than 15%. This stock typically is a mover. As I bring in more data here, it will definitely pop around earnings. Okay. This big gap that it had last time was obviously a nice winner. And the stock is, if I zoom back in here, over the past week, this stock has been consolidating right around that $45 level, and we could see double-digit moves from Affirm. And again, it should be greater than 15% on there. A couple more to go through. We have Pinterest here. Okay, Pinterest will announce Thursday after market close as well. This is also a big potential mover, greater than 15% on Pinterest. And again, once again, consolidating move. This consolidation around 32.5, 32.25. We would anticipate then a big pop. If I pull in more data here, you can see the last earnings cycle here. These two big candles going downward, followed by a third day, just 3 days in a row. This stock just got killed. All right, maybe we'll see that type of move again for Pinterest. Then Toyota Motor. All right, Toyota, we have expected results on Wednesday. This has an expected move of just 7%. Okay, this announcement is Wednesday before market open. All right, so as I pull in data here, you can see how quiet this stock is overall. All right, every now and then it gets a little bit of a drop or what have you, but normally this thing is pretty quiet. Okay, just kind of going with the flow, not real big moves, and we're expecting that once again with Toyota. Oops, sorry about that. Just trying to expand the screen there a little bit without losing my wording there. So Toyota Motor will announce Wednesday before market open, as I mentioned. And finally, we're going to look at Expedia. Expedia didn't even make my list for this week because of it's categorized by those that we expect the biggest moves out of and those that we expect the smallest moves out of. And believe it or not, Expedia, even though it has an expected move greater than 15% for Thursday, for that particular day, it actually did not make on my little sheet there, but it does have earnings this week, Thursday after market close. And again, it is expected to be a mover of greater than 15%. I love the fact that we have this consolidation action here right between 155 and 160. It's been going on for about 2 weeks. 2 weeks going into an earnings event. This is potentially a great setup for a breakout trade. Okay, for a big breakout trade. All right. Now, that is it for this week as far as what we're looking at, what we're focused on. I've still got a big list, as I mentioned, that I use for our subscribers. I'm looking at over 90 stocks just this week for the subscribers to our Delta Neutral Breakout publication and our Delta Neutral Income publication, and where we do a lot of earnings related trading. So speaking of trading, I have a couple of positions to talk to you about. Remember last week, 2 weeks ago, we left open our strangle on Deckers. Okay, and the I said last week that I would go back over it this week. We would see how the stock does, and let's take a look at those results. So the stock did gap up over earnings, but it didn't quite get higher to our break even in the trade. So that's where I mentioned that we would be holding on to the stock and wait for wait for follow through. Well, the stock just consolidated sideways. Okay. That consolidated move had us with a loss on the position. And actually, we haven't had very many losses on this show, but this was a loss of just $365. Now, I say just $365. You have to keep in mind this trade was about $1,400, a $1,400 debit. So for an appropriate account to trade this type of thing would have been about a $20,000 to $25,000 account, and considering you don't want to risk more than 5% of your portfolio to any one trade, okay, that equated just that $365 loss was just a 1% impact negatively to portfolio. When you lose 1% on your portfolio, that is easily recovered. That is easily recoverable. And I'll show you that in just a second. But one more word on this loss here. That was a 27% loss on risk. And that's one thing about these trades. Even if they don't move a lot, you seldom, if ever, are risking the entire principal. Can you lose your entire principal? Sure. If you forget about the trade or you just freeze and you don't do anything and all of a sudden the options expire, the stock didn't move, that's when you can. But when the stock moves like this, that mitigates a lot of your risk in the trade. We only lost a little over $300. And if we take a look at our Carvana trade that we put in for last week, we were expecting a big move out of Carvana, and boy, did we get it. If we, as we put the position on, this debit was a little over $2,000 for this, and boom, this stock popped up, rallied hard throughout the day. We were following the stock. The stock hit 259 and then started to sell off. And on that way down, we gave it a little bit of room, a little bit of patience. We exited that around 256, around $256 after a high of 259. That generated a profit of over $2,100. In fact, $2,195 on that particular trade. That is a return of 91.6% in just 2 days on Deckers, or excuse me, on Carvana. Sorry. So between Deckers and Carvana, you had a small loss on Deckers, but then this particular trade not only made up for that loss, but a lot more. A very nice trade, almost a double or 100% We almost doubled our money on that particular trade. And that's what we expect from these big breakout stocks. So if you like those big breakout stocks, well, I got another one for you today. All right. This week, we're going to be looking at Expedia. I talked about that stock just a moment ago. We have an estimated move greater than 15%. Pricing on this particular trade, as far as the options go, came in around 10%, where we need the stock to move up or down by 10%. And with the stock historically and estimation of greater than 15%, that's where our edge comes in. And we're expecting this stock to pop with that consolidation move that you see there. They have earnings once again Thursday after market close. So we will be talking about this stock next week and how we did in this. But this is a strangle on Expedia. We're using the half strikes, the 162 halves on the top for the calls and the 157 halves, I believe, on the bottom. And that is around a $13 to $1,400 debit for this. So again, it's going to be about a $20,000 account and greater to use proper money management. But Expedia is our pick of the week here. So lots of earnings. We have elections tomorrow. Don't know if we'll have a winner from that. We know we're going to get a new president one way or the other. We have economic announcements, lots of potential market movements that could impact stocks. We will be watching it all. Thanks for joining us this week on Earnings Call, and I will come to you once again next week. Everyone have a great trading week. Take care.